Eric Muathe, Muathe.com with world market analysis for the weekend of March 11th and March 12th, 2017. Let's take a look at markets here. Asian markets were, let's call it mixed. Japan was up nicely, about 1%. Other markets were either to the upside or slightly unchanged. Take a look at European market before the close of their session, or just about. We can see here for the most part, again, slight gains on Friday. Let's take a look at the Americas. We can see Brazil is up slightly, Canadian market unchanged, S&P 500 up slightly with pretty much a whole session to go. Let's take a look at those world charts. And really, if you take a look at the world charts, what I can conclude here is that most of the charts haven't changed from last week. We begin with the Australian market here. We can see top side, RSI resistance still continuing to be a problem. So until the market can clear that line, we have to assume that this market continues to be suspect. If we take a look at the longer term monthly view, the same type of situation. We have the top side, monthly RSI still causing a problem here. So if the Australian market was to move higher, it would need to break out above that clearly defined line of resistance. It would also need to push its price above the recent monthly closing high. In fact, not recent, but going back to 2015. So without a breakout and without prices moving above the prior close of 2015 on a monthly basis, without RSI moving above this well-defined resistance line, we can assume that at best this market should be sideways. And if this continues to be the case of resistance being shown, chances are the next major direction still continues to be down, in my opinion. If we take a look at the Hong Kong market, and this is the chart that I track, you can see that last week I spoke about this previous break line. This is a long-term monthly view going back to 2008. Once we broke here, this level was one to watch. Market has come back to this level and tried to move above it during this period here, but every time market's been rejected. So resistance here in price and here, and over the last 2 months we failed to move above this previous break going back to 2015. So that's the challenge for the market there in terms of price. We can obviously see that the RSI is also projecting similar type of a situation where there's resistance based on this prior break. That break in the RSI trend line brings the market lower, again coinciding with that price break. And we've been drawing a line from here. We can see that over the last couple of months, going back to late 2016, this has been a problem. So until the market can jump above this previous break line, and until the market can move above that RSI resistance, chances are this is a market that is poised also to struggle, and maybe at best it is sideways without a breakout, and without a breakout in price and RSI, chances are the next major direction also points to be down. This is not the only market facing some type of monthly chart problems. If we consider the Chinese market, we can see there was a trend line break somewhere here. Trend line break becomes a level to watch. We tried to move above that level recently. During this period here. And the market has been rejected all these months here when it was trying to move above that line. That's a challenge. If the market was to move higher, it needs to clear that 2016 monthly closing high. The level to watch there is 3250.03, which goes back to this monthly closing high for 2016. So that's a level to watch. If the market can clear that level, that would be good. As far as the RSI is concerned, we can also see a challenge in that the market is coming back to test this break. This break in late 2015 during this plunge here. And so we take a line from there. And again, we can see that this has become resistance over the last attempts trying to move above that line. So as long as the market is showing resistance here, as long as the market is unable to move above this price, again we see another market showing that at best for now it could be sideways, and at worst might be setting up to move lower. If we take a look at the Japanese market, and again here we go to the monthly chart, we can see that this is a level to watch. This was the break of the highs of late 2015 during this drop, and so we are coming, in essence, coming to test that level, and the market needs to clear that line. Trading above this blue line is encouraging for bulls. Otherwise, if this is confirmed as resistance, we see yet another market that is potentially at current levels looking to be sideways, if not ultimately down, if it cannot clear its monthly challenges based on the RSI break from the previous movement low. So until we can move above this line, this market continues to be suspect in my opinion. If we take a look at the Indian market, we can see that the Nifty also is coming back to test this line we've been talking about for many weeks. So this RSI broke down in 2015 off the highs there, and essentially we are coming back to test that level. And until the market can clear this line, this market also, in my opinion, has a lot of work to do before it can clear this line and move higher. Otherwise, confirmation here might suggest that the next major direction is down. One thing we've also been talking about is the potential for a good breakout above 2015's monthly closing high, and that's at 8844.60, which is this monthly closing high in early 2015. So if the market can sustain levels above that, that can be considered a breakout. If it can hold above that level, that would be good. But the true test is whether it can hold above this resistance line. Again, this is a method I call uniformity. Check the description for more on this. So confirmation of resistance here month to month creates a little bit of a problem, if not a major problem. If we take a look at the weekly chart, we can see some problem here because we are failing to break out above 2015's weekly closing high. That level is at 8937.75. So we can see here we failed to close above that level, and over the last 2-3 weeks this has also been failure territory. So until the market can soundingly and positively affirm that it has intentions of clearing that space by moving above 8937.75, chances are with a failed breakout here, we might be looking at a market that could struggle. Also, we've been talking about possibility of coming back to show resistance based on this break line. This break brings the market off the highs here. We see a little bit of a drop. Now we are coming back to test that same level. So until we can confirm strength by moving above this line and by breaking out in price, chances are here's another market that is at best sideways and potentially looking to go down. I should also point out here that on the daily, we continue to see that this closing high from September 2016 continues to be a problem. Market seems to be unable to hold above 8952.50, which is this closing high here from the highs of 2016 on a daily closing basis. So again, we see multiple attempts to break out. As of right now, we haven't gathered enough momentum, enough strength to move above that level. So if the bulls want to take charge of this market, they would need to break out. Otherwise, the more we fail, the more we pull back, the more we'll be setting up for some type of a deep correction. Let's take a quick look at the Bank Nifty, and we can see the challenge here. Something we've seen in many markets across the globe. This was the break of 2015. Markets coming back to test this break level here. without moving above this line. The more we confirm resistance on that line, so resistance here and here, if this is confirmed as resistance, that becomes the level to watch. If we get confirmation of resistance, then this is suggesting that we are due for a major pullback. Otherwise, bulls will need to move above this blue line if the market is to see higher prices. But what I see here is we've been so far unable to move above this line, so I have to assume until we see a decisive clearance of that line, chances are we stall here, which would be consistent with other markets, and we see that the next major direction could actually be down unless the market can move above this RSI uniformity resistance line. Let me use this chart before I go to the South African market. We can see what happens when markets have uniform activity movement below the 50 level and back above it. You tend to have a bounce. Uniform activity support at the 50 level and back above it for a bounce. Uniform activity here, bounce above the 50 level for that re-entry. Uniform activity below 50 back above it for this re-entry. Uniform activity below 50 back above it for this re-entry. And all, remember, these are monthly reversal areas. This chart goes back to 08. It's a monthly chart, and here we can see perfect uniform activity below 50 back above it for this re-entry area. So that's how markets respond. Check the description link and you'll see some information about this. But what we can do here is take a look at the South African market. You can see that ever since it went above RSI 50 in 2009, it's come back and tested it here with uniform activity for the lows here. Recently, in late 2016, it held with uniform activity, and now it's doing its best to hold that level with uniform activity. So as long as the South African market is holding above RSI 50, there is a chance that it could actually stabilize after recording highs here and pulling back. This could actually be good action, suggesting there's a possibility that the next major direction is higher. Let me qualify that by showing you the 3-year monthly chart. So the risk also remains that if it doesn't hold the 50 level and slides, so let's say it slides here to 3-year lows, RSI also moves to 3-year lows, or the MACD, excuse me. Already one of the MACDs is trading at 3-year lows, so it's not a good sign. So the worst case scenario would be a break below to 3-year lows, which would be one of the worst sell signals. And again, you can check the description for a link leading to more information about the worst possible signal. So either we are getting good bounce at the RSI 50 level, which is constructive, or we fail and move lower. So right now, without adding our own opinion on this, it is holding the RSI 50 level, which is good, showing that it could be sideways at worst and bullish at best. Let's take a look at European markets. I'm going to use the EuroNext 100 index to talk about the French market, the German market, and the London market. So my conclusion here is the same thing we've been talking about for many months, is that ultimately the true test of European markets is whether they can hold above this recent break line here, right there. So if markets show resistance here month to month, that would be a major sell signal. Otherwise, if we can move above that line, that might be bullish. So all of these markets have the same look, same feel. I'm talking about the French market, German market, London market. And here, as long as we are showing resistance here, that's not good. If we can move above that blue line, that might set the stage for a movement higher. Right now, we haven't yet confirmed movement above this line. Keep in mind, I should point out here, the last time we stalled on this line, this previous break. So the break here of the highs right there. And so we're drawing a line from there. You can see the last time we stalled on this line, the market did drop. Resistance here with uniform activity for the highs there. ultimately we go down and then sideways. So we are coming back to test this line. Again, a breakout is needed by the bulls, otherwise confirmation of resistance here might lead to another suggestion that the next major direction could be down. If we take a look at the Canadian market, the big picture here is we are still unable to move above the previous 2014 monthly closing high. So that level to watch there is and has been 15625.73, which is this closing high on a monthly basis from 2014. So far we've tried to break out over the last 3 months with no success. The more we struggle to hold above this level, the more ultimately we might move lower. So bulls do need to take out that previous monthly closing high. And also there's a line going back to the lows of 09. So this line here was support, and then we broke below that line here, which is this movement here, and now we are coming back to backtest that line. So if we see confirmation on this backtest line and we see failure to break out here, chances are another market that could potentially be looking to go lower. Let's finish this by taking a look at the Brazilian market. If we take a look at the Brazilian market, something we've been talking about for many weeks, if not months, was that it was coming back in essence to test this break of the 2010 monthly highs. We draw a line from there, and without any type of adjustment in the current market, this is what we were suspecting might happen. It's happening right now with a double top. As long as this double top continues for the Brazilian market, chances are this market is also poised to pull back in the coming months. Eric Muathe with Muathe.com. Subscribers, be on the lookout for part 2 of this weekend's market analysis video, where I'll have a look at commodities and stock picks and ETF selections if I can find them for you. As always, good luck, enjoy the weekend. Eric Muathe with Muathe.com once more. Peace and blessings. ESS. Mwah. Don't worry. Be happy.